Rates this afternoon. Reserve Bank Governor Lesetja Kganyago has just announced that rates will remain unchanged for now. Now, that was expected. We are in an interest rate hiking cycle, but we've seen those interest rate hikes actually coming very few and far with lots of gaps in between, and that's a result of the slowing global economy, our own issues with growth. To discuss, we're now joined by Elise Kruger from CAD Capital. She joins me in studio. Elise, welcome to you. A bit of a relief for indebted consumers that there's no change, but let's start with the shocker, which is 0% growth expected for this year. Surely if we have any room for error, that means a recession is possible as well.
Yes, indeed. I must say that was quite a big downward revision to growth, bigger than what I thought the bank would do today. The IMF has recently come out with a 0.1 percentage point growth forecast for South Africa, and the bank was still at 0.6. So I thought maybe a 0.2 or 0.3 down. So that was quite a huge chunk that they've cut off, and I think it shows how concerned they are about what we see in terms of anecdotal evidence and the data that has come out in the last while. Having said that, after the first quarter shock, and you mentioned that the base was part of the downward revision, the fact that we did get the minus 1.2, and I think the bank did not expect a minus at all, which they actually mentioned at the previous MPC meeting. They expect a very small positive growth rate. So I think they had quite a shock as well. But after that, we had quite a few positive indicators on a quarter-on-quarter basis, to the extent that we at CAD Capital forecast about a 2.6% quarter-on-quarter growth rate in quarter two. So that will sort of reduce your need for higher growth rates in the second half of the year to still get to like a reasonable 0.4. So what I guess from that is maybe the bank's less optimistic about second quarter indications. We still do need to get June's numbers. But yes, it was definitely a big shock to see such a huge revision downwards. And like you mentioned, if there's now suddenly any form of an additional shock onto the system, we could be in recessionary environment. And that in a way to me is telling. I think the bank would not like to see negative growth rates going forward, and that might just be setting the tone for monetary policy in the next 6 months.
What you're saying, I've heard before that there are better indications. Some economists saying, look, we've seen a contraction in growth, we're in a tough time, but maybe better times ahead. But there's also a revision for next year, a downward revision for next year and the following year. We're looking at 1.1% and 1.5%. And this is just nowhere where we need. Just explain what this means for ordinary South Africans.
Well, it means a muddling along of our economy, which will mean no significant job creation in this type of growth rate environment. And that is what we actually needed most in South Africa, is job creation. I think it will mean more restraint by companies that will just try to survive in this low growth environment. Which will mean more margin squeeze. It might mean more job losses actually instead of any creation, because we remain below potential. He mentioned currently the GDP potential growth rate is at 1.4% for 2016, with tiny upward revisions for the next year or two. But it really means to us that for 3 years we're going to grow below potential, and that will really to us mean no prospect of serious job creation.
I'm so glad you've brought this up. What does potential growth mean, and why are we not achieving that?
Well, potential growth would mean that with the current, available labour capital, what can you achieve with what is available at the moment? And that is what gives you the sum. It's a bit of a hazy figure, meaning that different economists will get different numbers. I think the Reserve Bank's figure is considered to be the most credible one, because they've got numerous models to work it out. You've got a model that's running from the labour side, labour capital ratios, and then you've got statistical ways that you could also work it out from looking at long-term trends in GDP growth.
Is it fair enough to say that as an economy we're being lazy, we're not achieving our potential, policies aren't at an optimum, we're not in the gear that we could be if we were making the right decisions?
That's exactly what it is. We need some structural changes to the economy to lift our potential. We need to change, for instance, some of our labour market.
And to even be at our potential.
Yes, yeah. So we need to do a few structural things to lift our potential. So at the moment, even if we grow flat out, it will be too low. the potential is only 1.4. We need, I mean, if you look at things like the NDP indications, we need 5% or 6% to achieve employment, goals in South Africa. So we're way off from that, limits that we should be. And, the problem is we only can grow, say, at 1.4 at the moment, even if all cylinders are running. And to lift that, we need some structural changes. We need to make the whole business environment more conducive for business to grow in, to create jobs, to invest. We talked about the low capital spending that we've seen in the first quarter, a drop of 5.1% quarter on quarter for private enterprises. Shows you in South Africa there's no fixed investment spending happening. Why not? There's policy uncertainty. There's other problems that are hampering businesses from operating at their potential. So yes, there's maybe big stockpiles in banks and on the markets invested. There are money flowing around, but it's not invested to the benefit of South Africa for reasons such as political uncertainty, policy uncertainty, some of the fun and games that we've observed in South Africa recently.
Yeah, this is the refrain we keep on hearing, that we could make better decisions, we could lessen that give investors some certainty. Please stay with us. Elise Kruger, we've looked at growth. We'll come back and look at the outlook for our interest rates. What can we expect as the year continues? Stay with us.
If you look at artists, they've got one of the abilities to either form new conversations, they can paint a picture of a country, they can paint a picture of a mindset of a country.
The Cape Town-based ballet dancer recently won at the 2016 and 2017 Rolex Mentor and Prodigy Arts Initiative.
South African hip-hop right now is sitting at a level where it's Ngudu, Yippee and Roll Up. When you put them all in one room, you actually have like the ultimate super South African fact.
And you're watching Trends, do not go anywhere, stay right there.
Catch Trends for that 1 hour weekly dose of arts and entertainment news every Saturday from 12 to 1.
What causes Parkinson's? How common is it?
Your research showed that it's slightly more prevalent in men.
Yeah.
It's equally affected at women as well.
Yeah.
And all races can be affected with Parkinson's. There is no such thing as one race is more prevalent than the other.
Parkinson's disease is the disorder of degeneration of the neurons, therefore exposes one to have those unwanted movements of the body.
I live my normal life. I wake up in the morning, I do some exercises here and there.
It's just a movement disorder. It's going to affect how he lives his life. And I think as a family, it's just helped us get a little bit closer and surround him.
Catch Health Talk every Saturday from 9 to 10 with Dr. Sillo Mutawo.
Certain choices in life lead us not to our destination. Prostitution will not.
Everything that I used to do then, it was something that I never thought of, I never dreamed of.
One bad choice in life led her to another.
Most of my clients, they used to ask me a question, what am I doing in that industry? Because it does not suit me at all.
Her demons haunted her until she changed her life.
I used to pray that, Lord, if you can deliver me from these drugs, I promise you that I will serve you for the rest of my life.
She has since found peace and is serving her community.
We'll try by all means to spend time with all of our kids.
Join your host, Buleng Mulabati, every Friday at 17:30.
From the moment you start your day.
My biggest question is how I got myself here on time.
Yeah.
This is so early for a comedian, I gotta be honest.
We are there for you. We bring your morning into perspective.
As news breaks throughout the morning,
is an investment into the future of the airports company, but also the future of our children, the future of our country, the future of the transport sector.
We'll make sure that you get the full story.
Give us quality music.
Load shedding. Listen, this winter.
It's a thing of the past. And you can count on the weather team with expertise.
Join us live at 6 a.m. daily.
Welcome back. We're bringing you a special broadcast on our interest rates. The bad news that we were talking about before the break is that the Reserve Bank saying today that South Africa's economy is not expected to grow at all this year in 2016. That means we are in the risk territory for a recession, although the Reserve Bank expecting 0% growth. The good news, not if you're a pensioner and hoping for higher rates, but if you're in debt, as many South Africans are, the good news is that interest rates will not be going up. We are generally seen to be in a rate hiking cycle where those interest rates should be going up, but things have changed. And one of the better scenarios for our country, the Reserve Bank governor was talking about today, is a moderation in inflation expectations. Not inflation yet, but in the inflation that we're expecting in future. Now, of course, interest rate hikes help to curb inflation because it means that it's harder to borrow. There's less money basically in people's back pockets, so they can't go on a spending spree, and that demand often pushes up prices. So at least some better news on inflation. Let me bring in my two guests now. A new guest, Nganti Pillay from Nascent Advisory and Research, and of course still Elise Kruger from CAD Capital. Welcome to you. We spoke to you before. Welcome to you, Nganti. Let me start with these surprises that he was speaking about on inflation. Let me ask you about that. Just explain how expectations around inflation are changing.
Look, I think that one of the best things about our method of inflation targeting is that it works on what people think is going to happen, right? And so what the Reserve Bank is constantly trying to do is sort of manage those expectations. And, what they've been doing with interest rates hikes is not so much to actually control inflation itself, because there's nothing really they could have done with interest rates. Remember, the volatility of the rand is not particularly something they can do anything about, because they, as they say, they don't manage the rand. They certainly couldn't do anything about, some of the external factors that we've been facing. Food inflation that has been coming through has been a result of the drought, so there's nothing really that could come from that. And so increasing interest rates didn't have much of an effect, as it were, on inflation, but it has changed the way people see inflation going forward. So, for example, one of the things we want to show is to the labor unions, to say to them, listen, we are working on inflation, so don't go and look at higher increases, because people look at inflation and say, look, if it's going to be at 9%, then I must ask for 9% wage increase. So what the central bank has been doing to say to them, listen, we are managing that, so don't go for 9.
It sounds like you're saying the Reserve Bank is playing a bit of a political role. Do you agree, Elise, or is there real information and some control over inflation?
No, I agree. I think it is definitely what we sometimes call open mouth operations from the Reserve Bank. They can't actually do something about it, but they talk about that and they try to talk it down, because obviously if the Reserve Bank expects 9%, then everybody else going to expect 9+. So, and therefore the target band of 3 to 6% still have a very important role in South Africa, because it gives us at least parameters, within which we can say if inflation is there, the Reserve Bank is comfortable, you would not expect significant monetary policy tightening in such environment, and so on. But I agree with that. It's trying to address the expectations, and we've seen second quarter expectations mostly sideways. And if you think about the significant depreciation in the rand exchange rate in January, from December onwards, I thought, there's going to start to be a shift in inflation expectations into 2016, and it didn't happen. We still just get mostly sideways numbers, which are definitely good, and I think maybe that one could conclude that part of this whole process is indeed working, as we don't see significant, sort of upward expectations being marked into the surveys at this point in time.
And people are talking about better weather, so then that drought, at least the concern subsides a little bit. He was talking about the oil price, the rand strengthening. We may even see a petrol price cut next month. So if things stay the same, it's looking looking better for South Africa. Is that fair?
It is looking better on the inflation side, of course, because I think one of the things that we are starting to see also in agriculture is that even other geographies, remember one of the things that was happening that with the rand, we're trying to also import, right, because we had shortages at home. So one of the things we have to do is to try and import where you can, and the weaker rand doesn't help you with that, and certainly also other geographies being producing. So we're getting some data coming from South America and other partners that there are some excesses coming through, so perhaps we will be able to get some food a little bit cheaper in terms of exports. But then at the same time, the rand can move anywhere, right? We are still going through Brexit. One of the things he mentions is this idea of Brexit. Nobody really knows how this thing pans out. It's, in the next coming months, how does it work? How will it be resolved? So it's creating a lot of anxiety in people's minds. So that could still hit the rand. Remember, we are always volatile in terms of that. So that's one place you can't really hold back.
Elise, would you agree with me that Brexit has actually panned out better than expected thus far? People talking about a huge impact on the rand. The rand has strengthened incredibly.
No, I think that's one of those cases where, it's very difficult to probably say beforehand, but I've read just in the past week a few of those, forecasts expecting the rand to take quite a pounding afterwards. So it shows you just how difficult it is to call the rand exchange rate. That's the one thing that keeps all economists humble, is trying to forecast the rand exchange rate. So yes, indeed, and suddenly the high yield environment, is again in favour, and we've got, interest rates as we talk now, 7% repo, 10.5 prime. So if you are having the prospect of only minus or only 0.05, or in Euroland the deposit rates at the minus, you're going to look elsewhere. Even with the risk of South Africa, what we call a risky investment destination, you've got, I would say, enough compensation with our current interest rate environment to still get the investments flowing.
What you're saying is that our rates are relatively higher, so investors come here for that reason. Is this a great opportunity? It seems like we've been given some breathing space. Firstly, indebted South Africans not facing higher rates as expected, and investors coming in rather than that dreaded outflow or having reason to come in.
Yes, we should use this window of opportunity that has been created by the stronger rand, to, number one, imports, like he mentioned to us, slightly lower cost, but also it gives us opportunity where you don't have to hike your interest rates, say, for the next few months. It can help the economy to gain a bit of momentum, and hopefully we could get some form of structural developments going before December, so that by the time the next rating agency review is coming up, we don't have to be so anxious about, compared to the past around. Because, he mentioned that today in the Setja Kanyago as well, that if we do get a downgrade, the rand will take a pounding once again. So for now, we've got a strong rand, and we should use this opportunity that it has created for us.
Auntie, let's start talking about where interest rates are going. A lot of the journalists in that session afterwards were saying, what about the possibility of rates going down rather than up, given the low growth? What can we expect for the rest of the year?
Look, it's very unlikely that they would actually take them down, because part of what they have to do is to keep to keep credible, right? And one of the things that we're emphasizing that we are on the upward cycle. So we're very clear we're on the upward cycle, and that's what the market expects. I suppose we can break throughout that upward cycle, so that people sort of, as you are saying, growth is not coming through. We are fairly comfortable about inflation, so we will break for a little bit, but we are not reversing the stance, because it can be very damaging to suddenly, turn around. In any case, we still have our interest rates are still on a historical basis quite low. What you don't want is to keep hiking them, because it could damage. I think there's some numbers that have been coming through, especially around manufacturing. That suggests there's something there that might be a little bit of momentum. What you want to do is to keep that going, to allow that, to stay there, because I suppose the rand is still much weaker than what it was. Remember, we come from 12, and this is some space, I suppose, for exports to get a little bit of a boost, and we're seeing manufacturing maybe starting to pick up on that. And of course, so this is something that's quite important, to keep them where they are and not do anything for now, because we have to manage expectation, we have to stay credible. So I think one of the things that is unlikely is that they start cutting, because that could also hurt us. Remember what Elisa was saying earlier, is that because they also still make us an attractive destination for money, so investment. So people do bring their money here because our interest rates are slightly higher. To cut them would actually endanger the rand, I think, in a little bit, which would actually exacerbate inflation.
All right, so you're basically expecting a flat line for a while. What are you expecting towards the end of the year?
I tend to agree with that. I think the Reserve Bank will not consider a cut unless inflation is in the middle of the target band, meaning about 4.5%, where we were last year. But I mean, at the moment, their forecast suggests 6.66 and a 5.5 for 2018, which I think is nowhere near the levels they would be interested in cutting interest rates. For the reason, well, number one, credibility. Number two, we know that they don't like to be on the upper end of the target band. I think they would definitely like to see it below 5 before they will consider to cut. But I think they could perhaps consider to keep it unchanged at this current level for a prolonged period. And I think we got used to unchanged interest rates in South Africa after the global financial crisis. So to have an unchanged interest rate, we are these days quite comfortable to see them sit on their hands rather than to hike further while this economy is so weak. And I do think, with today's growth number on the table, I doubt whether we're going to see another hike in the rest of this year.
I guess if there's no change, businesses, individuals can plan, at least to give some stability. I really enjoy what you're both saying about the political role or the rhetorical role of the Reserve Bank. I hope that we can chat about that in future, and the role of the Reserve Bank in this economy. Thank you so much for your time. Unfortunately, out of time. That was Anti Pai at Nascence Advisory and Research and Elise Kruger at CAD Capital talking about today's announcement. If you've just tuned in, the Reserve Bank Governor announcing no change to the benchmark interest rate. We will be back at the top of the hour with more news. Ciao.